The American Cotton Shippers Association, also known as ACSA, is a trade association primarily made up of cotton merchants, founded in 1924. ACSA members manage the majority of the world's cotton trade, providing services of merchandising, delivery logistics, and risk management to their customers. ACSA will be holding its 101st annual convention in Palm Beach, Florida in June of 2025. For more information on ACSA, including their convention, view their website or Twitter account at Cotton Shippers.
Hello again, everyone. Welcome back to another edition of Cotton Grower Magazine's Cotton Companion Podcast. I'm Jim Stedman, editor of Cotton Grower. I'm joined, as always, by my good friend and colleague, Beck Barnes. And again, we'd like to thank the American Cotton Shippers Association for their continued support in helping kick off this episode. Well, Beck, with harvest still wrapping up in a few places across the Cotton Belt and Thanksgiving behind us, we're moving into that holiday break before meeting season begins. Industry news is just a little bit scarce right now. Growers are beginning to focus a bit more on their plans for next season. And there are a lot of factors and considerations to sort through as we start moving into a new year.
Yeah. Well, I hope everybody's fat and full coming out of Thanksgiving here as we pod on December 3rd. So you've had a few days to get some couch time in and watch some football if you're out there. I'm happy that our farmers who work from dusk till dawn and sometimes in between during the year, I'm glad that they have a little bit of a down period in between.
Yes.
The holidays after the harvest is put away. The opposite is true, as you know, Jim, for me and you. You mentioned meeting season, and as you know, between you and I, thing came through, and suddenly we had to reserve a room at the Gin Show for this event that we're going to be putting on, and give you all a little peek behind the curtain. Everything just sort of gets very busy on our end at this time of year, in addition to, trying to be Santa Claus and all the other typical holiday stuff. So, yeah, I can be a last-minute Christmas gift shopper. I cannot be a last-minute event attendee and event host. So, anyhow.
Yeah. Well, I mean, it is that time of year where we have to cram like 8 weeks of work into 3.
Yeah.
But, again, I don't anticipate anybody who's out there listening to feel sorry for us because that's what they do every day, every month. So, we're right there with you. Just
no sleep being lost amongst our hardworking audience.
That's right.
On our behalf.
That's right. Well, I tell you, with all that being said, we're going to move quickly through today's episode in order to spend more time with today's guest. That guest is Hank Reichle. He's president and CEO of Staplcotn, which is based in Greenwood, Mississippi. And Hank's going to join us in a few minutes to review this season, talk about some of the challenges and headwinds that cotton is still going to be facing in 2025.
Yeah, we're looking forward to that. But before we do that, we have a message from one of our new sponsors, the Cotton Board. The Cotton Board has some information they'd like to share with you right now.
Every second, 4,595 text messages are sent. Every day, 10 million new TikToks are uploaded. You check your emails when you wake up in the morning, Instagram during commercials. You're on to the next thing before you're done with the last. We need to go back to basics, make intentional choices with our time, with our activities, with our clothes, with right now. Cotton is the fabric of now, the fabric of our lives. Find out more at cottonboard.org/consumers.
Okay, a big thanks to our friends from the Cotton Board for that message and for their support.
Well, let's go ahead and open up the Cotton Companion virtual studio and welcome Hank Reichle, president and CEO of Staplcotn, back to the podcast. Now, Hank, it's been a while since we've had an opportunity to visit with you. If you would, give our listeners a quick update on Staplcotn, the membership, and some of the programs.
Well, Jim, first off, thanks for having me back on the podcast. When you sent the email, I was happy to do this. I always appreciate the invite. Staplcotn is a grower-owned cotton marketing and warehousing cooperative. We serve about 5,000 members in the 11 cotton-growing states in the U.S. Mid-South and Southeast. Our marketing model is a pool concept in which growers turn over the marketing and warehousing of their crop even before it's planted. and we perform the risk management on the crop, make pricing decisions, and sell and ship that cotton to textile mills around the world.
Well, it's been another interesting year for the cotton industry, to say the least. How would you evaluate this year for Staplcotn and for its growers? Some of the highs and maybe some of the lows that you see.
Well, a few themes stand out with this 2024 crop. One is the price, which is today around 71 cents a pound as we record this podcast. When you think about this crop year going back, say 10 months ago, it was one that showed promise last winter with cotton prices being able to rally more compared to other row crop prices. But just before planting time around the beginning of April, cotton prices started to drop, and they dropped, very hard, and actually fell even more than other row crops. And today we find ourselves where we are in the low 70s. Even though cotton never really projected a profit last winter, it was still better looking than corn and soybeans when planting decisions were made. So that's one. The offer of some promise for cotton prices, and then they fell ultimately. I think the other that is just on everybody's mind is the cost of production. Cost to produce crops this year are near a record. And when we going into this season, we knew that growers were putting a lot at risk for every acre they planted, not just cotton, but all their crops. So that's certainly a major theme when I think about the 2024 crop. And when you think about that risk, we've seen lower ag commodity prices before, but when you take into account the cost to produce today, and then also where support prices lie under the 2018 Farm Bill, farmers went into this season with just a whole lot more risk. And I'm going to see if I can articulate that a little differently. When the 2018 Farm Bill was written, the PLC reference prices, or those that we call the safety nets, they were pretty good. They actually turned out being pretty close to where the market is today for corn, cotton, and soybeans. But when those were put in place back in 2018, they were designed to lessen losses for farmers when prices hit these levels. But now imagine that the farmer has 25 to 30% more in the cost of that crop. So how effective are those safety nets today? They're terrible, because what used to be a shallow loss now turns into $150 to $300 acre loss across a farm, even with good yields. And so that's kind of where we stand. And then you look at the supply and demand fundamentals, strong U.S. dollar, all the trade uncertainty we have, particularly increased competition from Brazil, especially for new production in corn and soybeans, a weaker China and a weaker emerging markets where we got used to seeing a lot more demand from those markets for ag products. And we've got geopolitical concerns, especially with China, which is obviously one of the biggest consumers of ag product in the world. And we've got consumers that are challenged by inflation, so it's changing their purchasing patterns. Unfortunately, that same inflation is stuck and exacerbated at the farm level, and that's a double-edged sword for farmers. You take all those factors, they're on everybody's mind. They're front and center. They're front and center in every publication you read. Speculative investor positioning is negative across all the agricultural commodity complex, for those reasons. And so that just further depresses prices for farmers. And then I think a few other themes that when people look at the U.S. growing 3 years of crops that are less than 15 million bales, 3 years in a row, and that was mainly because of Texas drought, that never really led to any sustained price rallies. Why is that? Because again, that Brazilian production is competing for U.S. cotton market share around the world, and it's winning it. So, you look back and you just say, a betting person would say, small crops like that 3 years in a row, that's not going to be enough U.S. cotton. Well, it was, and that's because of Brazil. So that Brazilian competition is certainly front and center. I guess from our perspective at Staplcotn, it's a good year in terms of volume. We're going to be about 2.6 million bales of cotton this year. That's up a little bit from last year. That's a significant percentage of the region where we operate. But from from a price perspective, the market hasn't given us many opportunities. We'll do the best to manage a difficult situation for our members as well as we can. But those are kind of the themes that I can think of when I think about the 2024 crop, and none of them are none of them are real positive at this point in time.
Yeah. Well, definitely. I know obviously we've talked about, 2024 cotton harvest is still wrapping up right now in certain places. There's certain parts of the Southeast, they're still trying to get the crop in. Certainly you get out in the northern part of the Southwest, up in the High Plains area and Oklahoma and Kansas, they're still busy. Um, but recently I've driven through the Mississippi Delta and up through the Missouri Boot Heel, and I'm seeing an awful lot of modules still sitting in the field waiting for that ride to the gin. So obviously, it seems like growers have done their usual good job in spite of some weather issues and other things this year. Uh, what's your overall impression of this year's crop? I mean, you mentioned you got you're like over 2 million bales looking at for staple cotton. What do you think the quality or of the crop looks like?
Well, you're right, and you just said something in your question there that I'm hearing from a lot of people, and you get out on the interstate, particularly as you drive through Arkansas and Missouri, and people just say, even in parts of Mississippi, they just say, "I've never seen so many modules." Well, there's actually a little bit of truth in that. So, as I mentioned earlier, the prices last winter for cotton were relatively more attractive than row crops, and that led to an increase in cotton acres, especially in the Mid-South.
Hmm.
Cotton acres were up more than 20%, and if the weather around planting time had cooperated even more or more than it did in Tennessee, I think we'd have seen even a larger increase, because in the Mid-South, Tennessee was the only one where acres were not up. As a matter of fact, when people say they haven't seen as many modules back in 2011, the modules would have looked differently, right? They would all been the
That's right.
traditional modules. But Arkansas planted the most cotton that they've planted since 2011 this year. And they had good yields too. And in Missouri, the most since 2006. So definitely acres in the Mid-South were up, and in pockets yields were excellent, and on average they were pretty good. And then in the Southeast, which is also extremely important to staple cotton into U.S. production, acres were up only slightly though, maybe about 30%. So in terms of yield in the Mid-South, there have been, as I just mentioned, pockets of yields that have just been off the charts, bumper yields that are certainly encouraging. In the Southeast, I would say it's been more of an average to below average year. A lot of that has to do with the timing of when drought developed. It also has to do with the hurricanes. You think back about the 23 crop, we really didn't have much impact from tropical weather. But in 2024, we had hurricanes Debbie, Francine, and Helene that all did varying degrees of damage to the cotton crop. Debbie hurt the Southeast early, and many would say that it was actually the worst on cotton compared to Francine and Helene. But obviously, Helene was devastating to life and to property, and there were parts of the Southeast that were really decimated by it. But even though we had some major and untimely hurricanes hit an open crop, particularly over here in the Mid-South, we were fortunate that the weather behind those storms was generally favorable. You think about it, we had about 30 days of just nothing but sunshine after those storms that really helped sort of bring things back around and helped with yields. And I think that's one of the most impressive things about the yields that we've seen in Louisiana, Arkansas, and Missouri, and then parts of Mississippi this year, is that there was in many cases, 5 to 15 inches of rain hit that crop when it was opening, and we were still able to make some really excellent yields. So as I said before, that's encouraging. It's the price is discouraging, right? But
Yes.
but and the cost to grow it's discouraging. But the yields we're seeing when even in the face of some weather adversity have been headed in the right direction. And then with that sunshine that came after the storms and was prolonged there, we really did see the quality sort of return to an average. It's not an above average quality, but we didn't get all that rain on the crop, and then just typical weather patterns that set in as the harvest season progresses. We just had a nice open time period that allowed a lot of the cotton to bleach back out and become, we call strict low middling to middling sort of styles, which is typically what we get. The farmers, there's some discounts out there this year, but not too many of them, so that's good. Mike this year was not particularly high, so that's a positive. And then again, most of the cotton was able to bleach back out. It maybe didn't catch as much of a premium as it's been catching in the last couple of years, but most of the big discounts were avoided, other than maybe the first, say, 5 to 10% of the crop.
Yeah. Okay. Well, we've talked you mentioned something about, obviously, we've seen cotton prices just sort of hanging around in this low to mid 70s, 70-cent range. Other commodities, other optional crops, particularly for the Mid-South, you still got price weaknesses attached to those as well. Do you see any change or shift that you might anticipate for cotton acres going into 2025?
Well, it's early, as we know, but it's time to start thinking about that for a lot of reasons. Look, I think, as you pointed out in your question there, I mean, nothing's attractive right now. Cotton, soybeans in particular, which are the three principal crops in this area, they're not attractive. I think when it comes to next year, farmers are searching for something that lessens the blow from farming another year of row crops under these kind of conditions, where you've got relatively low prices and super high cost of production and uncertainty about farm bill. If you look at just sheer price ratios, corn has gained slightly on cotton and soybeans. Cotton's maybe gained slightly on soybeans, but there's no clear winner, right? There's one that's super better than the other, and matter of fact, they're all downright disappointing when you look at the projected results of farming any of them. I wouldn't expect the Mid-South or the Southeast to expand acres unless you were to have prices rally back to 80 cents or above, and to have the competing crops sort of stay where they are. Then in that case, you'd probably see an increase. But absent that, I would think that we might be in for a slight decrease, but only a slight decrease. And a lot of people would look at the market and say, I'm not growing cotton for 72 cents a pound. And if you think back about the 23 crop and the 24 crop, and I was telling somebody this the other day, cotton prices were pretty similar in 2023, and we had an acreage reduction. They were around 84, 85 cents. This year in 2024, back in the planning decision time, cotton again was around 83, 84 cents in March, and we had an increase. So it's all about relative prices, right? And relative profitability. When you look at cotton today, people are going to say, I don't want to grow it for that price. But then they look at the alternatives, and there's nothing that really stands out as being great. So for that reason, I would say we're probably in only for a slight decrease. I think one reason is that rotations are important. They're particularly important in the Southeast with peanuts. We've already seen an acreage cut in Georgia from where they typically have been in the last few years. So I'm not sure that there's a whole lot more acres that will be shed to other crops there, just from a rotational standpoint. And then I think too, the yield trend that we've seen when you're not impacted by weather is that, people are starting to be a little bit more optimistic about the cotton yields they're seeing. Look, we have seen some cotton yields this year that we didn't know people could make in the Mid-South. And so when people figure out that recipe, and as people talk about that, and people figure out how to do that, and maybe we've had some sort of yield breakthrough, I think that keeps cotton in the mix. But I think probably the biggest influence on how many cotton acres there will be might be what the banker has to say. And in that case, with cotton being one of the more expensive crops to grow, and with everything being so tight, that could be a limiting factor on cotton. There's obviously more dollars at risk when you grow crop. Irrigated cotton has more yield risks, let's say, than corn when it comes to weather, just because of the timing of the harvest. So there'll be some factors that influence the decision at the margin, but as a whole, assuming people are able to assuming every acre is able to be grown next year, and I think it will be by someone, maybe not by the same people. I think cotton today is probably looking at a slight decrease, but marginal. And I think there's a lot to play out, between now and next year, but certainly don't see any increase in, maybe 5 to 10% decrease if prices stay where they are.
It's sort of like trying to predict this, the football championship brackets at this point.
Is now still time for me to
almost
lobby
anybody's guess.
for my favorite team to get into the CFP? No, I'm kidding.
Well, Hank, first off, that's a sore subject for me as an Ole Miss fan. So I'm gonna move the conversation right along.
So you're admitting you're an Ole Miss fan. Maybe since I work for a lot of members that aren't Ole Miss fans, I should be quiet on that subject.
There are very few of us in this industry. I know that much. We're quite outnumbered. But Hank, so I'll move the conversation right along. You mentioned some of these guys in the Mid-South finding that secret, yield boom recipe. No doubt they've been boning up on production tips within the pages of Cotton Grower magazine is what's going on there. So we encourage them.
I don't doubt that. Yeah.
Yeah. So we appreciate that. No, man, we have been talking here at great length, and we appreciate your expertise on these things about the impact that prices and competitive crop prices are going to have on acreage next year. Here at Cotton Grower magazine, as you might imagine, that acreage number is very important to us. We want as much cotton as we can get. It's better for us. So for good and selfish reasons, but we do know that those prices and competitive crop prices are the big factor, but they may not be the only factor. So we look at things like the potential for a new farm bill. It looks very unlikely that that's going to happen before this new Congress gets seated in January. We have a special economic relief package that we hear rumors about, but that has yet to be confirmed. That's going to happen. So, how much of next year's production, acreage-wise, would you guesstimate hinges on one or both of those things coming to fruition? And what might you be hearing from your member farmers about that?
Yeah, I think that's a great question. I think it's a great point, and kind of goes to the last point I made. Maybe the largest influence on acres next year will be what the banker says. And I think a lot of what the banker says is going to come down to what sort of assistance comes ad hoc. So whether that's economic assistance, whether it's natural disaster ad hoc assistance, that's going to be important for the 2024 crop. And then just a game plan for the 2025 crop that's supposed to come with an updated farm bill that I don't think we're going to get before the end of the year, unfortunately. But Congress is going to have to address that. When we kicked the farm bill down the road by extending, the 2018 farm bill, the cotton industry was telling Congress, agriculture was telling Congress, this is not a good idea. Cost of production is high. At some point prices are coming down, and they did. So Congress really needs to step in and try to fix what the results are of extending that 2018 farm bill. And I think how much of a fix is put in and how good of a safety net we are able to come up with for 2025 will be very important in those decisions. Staplcotn has taken a leading role in trying to get that message to Congress this year. We normally do our lobbying as part of NCC or our other regional organizations, but this year we just said, look, this has to be a grassroots effort. People were encouraging grassroots efforts, so we really leveraged our membership to go to Congress as a producer and say, this is what I'm facing. And we also pointed out as their marketer what they were facing on the global front in terms of competition from other countries, how other countries are supported by their government, and I think that message was well received. It was just a matter of timing, how and political will and money, right? How to pay for something like this. So the message has been sent. It continues to be sent. We continue to get feedback that Congress is working on it, and I think it has a huge impact on how many people we see farm next year. I think every acre gets farmed, or most every acre gets farmed, but they're without some both ad hoc assistance for 2024 and a better, more clear safety net for 2025, I think you'll see some farmers across the United States either voluntarily or involuntarily go out of farming. And I think when it comes to how that influences acres, of course, the PLC program is one of the main factors there. Our PLC is decoupled, the base is decoupled, so it probably has some impact, but it probably has an impact more just on the general health of farmers. But I think in particular, when you think about farmers that have investment in infrastructure, and if their base acres are tied to cotton and they feel that that safety net is one that is relevant to their cost of production, I think that's another factor that it would help keep cotton acres where they are, which, as I mentioned, is a little bit higher than they were in the prior year. That would certainly be helpful in keeping cotton in the mix, which we need from an industry standpoint, but we certainly need it from an environmental standpoint, because we know farmers do better when they spread their risk and when they rotate their crops.
Yeah. Yeah, well said, Hank. Now, staying on that kind of more of a political note here, we got the election behind us, and we have a clearer picture that's starting to emerge in terms of who might be placed in ag leadership in Congress, who might be placed in congressional leadership in Congress. So what are the primary challenges and concerns and maybe some opportunities that for cotton that you might see as we move forward into 2025?
Well, I'm going to sound like a broken record, but it's going to I'm going to set this up on a timeline. Right now, here and now, we've got to have the ad hoc economic assistance coupled with some sort of some sort of legislation that gets passed that does something for support safety nets for the 2025 crop. If we can get those done in a relative short order, hopefully by the end of the year, then I think we'll be in a position to buy ourselves a little time to figure out, what can we do to enhance the market for U.S. agricultural crop. So as the new administration goes about its trade agenda, we have to look for ways to, number one, make sure that we get good market access around the world for U.S. product. And I've got a ton of thoughts in this matter. A lot of them are probably wishful thinking. And while other ones are maybe less about wishful thinking, but maybe it's too early to be discussing them, because we're still just we really don't know what the new administration is going to do. But I think when you just boil it down, I think when we look at legislatively going forward and with the new Congress and the new administration, we've got to look for ways for U.S. agriculture and specifically the U.S. cotton industry to work with Congress and with the administration to find ways to get preferred access for our products based on our reliable and sustainable production systems that we have in the United States. And, I am confident that U.S. agricultural producers are they're the best in the world. They just have to have we got a lot of challenges in terms of the global marketplace. We have to address those, and I hope Congress will not only bring in better safety nets, right, but also help to improve the access we have for our product going around the world.
Sounds good. Well, needless to say, Hank, it's going to be another interesting year for cotton. We've got more than enough issues and distractions to keep all of us busy, whether it's from your perspective or from our perspective. Keep us busy, keep us on our toes. It could be one of the more challenging meeting seasons that we've had for a while. So, Hank, I just want to thank you for taking time to join us again today. We've gotten through Thanksgiving. I want you certainly to have a great holiday season coming up. And we're going to catch up with you again, probably at the NCC annual meeting in February.
Absolutely. Jim and Beck, look forward to seeing you at the NCC meeting. And thanks again for the opportunity to join you today. And you talked about those meetings. They're always productive. This year they need to be super productive. Encourage everybody to go and participate. And let's find ways to make this challenging environment be better in the future.
Sounds great. Thank you, Hank.
You go. Merry Christmas to you. Bye-bye.
So, all right, that's going to do it for this episode of the Cotton Companion podcast. We want to say thanks again to Hank Reichle from Staplcotn for joining us today. And we also want to say thanks to the American Cotton Shippers Association and the Cotton Board for their continued support and sponsorship of the Cotton Companion podcast. Now, as always, we want to say thank you, dear listener, for joining us. We hope that you have enjoyed this episode. And if you did like what you heard, please be sure and spread the word. Tell your farming friends and your neighbors about the Cotton Companion podcast. Here's where and how they can find us.
You can find the Cotton Companion in 3 easy ways. First, go to cottongrower.com/companion or simply click the podcast tab at the top of the homepage. Second, subscribe to our channel on iTunes or wherever you find your podcasts these days. And 3, sign up for our weekly e-newsletter, the Cotton Grower e-News, that's delivered to your email inbox every Tuesday morning. You can do that by going to cottongrower.com/subscribe. Also, be sure to follow Cotton Grower on social media. We are at Cotton Grower Mag on Twitter. And on Facebook, you'll find us by searching for Cotton Grower Magazine.
The Cotton Companion podcast is produced twice monthly by Tyler Hatch and Kim Henderson, our talented colleagues at the world headquarters for Meister Media Worldwide in lovely and snowy, as I understand today, Willoughby, Ohio. I'm Jim Stedman, he's Beck Barnes, and we'll be back with you in a few weeks to wrap up another year of the Cotton Companion. Until then, stay safe, and as the temperatures drop, stay warm.
Yeah, he works and he works and he works and he works all day.